What did Warren Buffett invest in back in 2003 that he called, quote, a game changer? Well, it's the same thing that has a 500% increase from REIT interest back from 2003. The answer, mobile homes. Thanks for joining me today. So if you look here at my screen, you'll actually see a Google Trends list where if you look at mobile homes, single family homes, and rental income, along with affordable housing over the last 19 years, you'll actually see that the searches for mobile homes has actually increased quite a bit, in line with what rental property you're seeing, while affordable housing has also increased, but the term single family home has stayed extremely flat. So what does this mean coming right out of the gate? So it shows us that the idea of mobile homes is starting to increase. The advent of mobile homes or prefabricated homes is something else you'll hear, has certainly crept up over the years. And as you'll see through my analysis and reporting here, mobile homes are not what you'd think of from the 1950s or 1960s. So this is not your grandfather's mobile home. So first things first, I go back to Warren Buffett. In 2003, Berkshire Hathaway actually purchased Clayton Homes, which is currently the largest builder of manufactured housing in the United States. Subsidiaries include 21st Mortgage, which is the country's largest lender for manufactured and mobile homes, and Home First, an insurance agency that offers coverage for mobile homes. So Warren went out and bought the biggest broker and developer of mobile homes, and then he went out and bought the insurance that underpins it. Genius move. As of September 2021, there were approximately 9.7 million mobile homes. So I'm going to skip over here to my friend Bard, and the first thing I'm going to show is what is the average price of a mobile home in 2023. So the average price is about $125,000, and then you pair that with the 9.7 million mobile homes in the United States, according to Manufactured Housing Institute. This number includes both single wide and double wide, as you'll see here. They don't really put into the triple wide, but if you take 125,000, you put that on the 9.7 million, you're into the billions in terms of market cap. Now, when I go back over here, what does the future of mobile home investing look like? Well, again, like I said, according to Warren Buffett, in 2003, he went all in. He actually acquired Clayton Homes for $1.7 billion, and 17 years later, its pre-tax earnings just for 2020 were $1.25 billion. So Buffett's bet is paying off. Now, one of the biggest advantages of mobile home investing is the lower cost of entry, right? You can purchase a mobile home for a fraction of the cost of a traditional home. Like I said, I go over here. What's the average price of a new mobile home in 2023? $125,200. So much below I believe the average for a single family home across the United States is around $425,000. So again, not an apples comparison, but certainly something that's good to know. So I'm going to move right into why is mobile investing a hidden gem. So I've talked to you about Warren Buffett. I've talked to you about the entry level price, but here's some things to consider. Again, I'm going to go to Bard real quick for this. We're going to touch on location, condition, mortgage, maintenance, and renting, or how long do mobile homes typically last. This is an article from the Ramsey Group. I'm going to link below in the description. But mobile homes cost around, the single wide, like I said, $76,400, and the double wide, $139,000, with it 400 to 1,400 square feet and 1,100 to 2,400 square feet. If I go down here, how long do mobile homes last? So this one actually took me by surprise when I was doing my research for this video. Life expectancy 30 to 55 years. That's incredible. Now, obviously houses last that long too, but when we start going through the maintenance and the renting and the insurance and the property management, the total cost of ownership starts to drop tremendously. I'm going to move over here to Bart again, and we talked about condition and we talked about maintenance. So a mortgage on something like this is obviously going to be lower. You have a smaller down payment. You know, it's sometimes, like it says here, can be more difficult. This is because mobile homes are classified as personal property, not real estate, which is, again, something I didn't know because I'd never really invested in mobile homes before. And you may have to pay a higher interest rate on a mobile home loan, but if you're looking at buying a single family home versus a mobile home, you're going to have a bigger down payment, and that should make the process of procuring it much easier. Next one is location. So location of mobile home is important. You want to make sure that the mobile home is in a safe and desirable place. So if I go back over here to Google Trends, you know, where's mobile homes pinging at the most? Well, it's pinging the most in areas that have actually really good locations. So if I look at this, it's pinging the most in Alabama, so you've got Gulf Shores. It's pinging in South Carolina, so you've got Myrtle Beach. It's pinging in New Mexico, pinging in Louisiana. Not so much in Florida as I thought. It's actually, there was another one up here. Yeah, West Virginia isn't too bad, but you're seeing a lot of these coastal states that are tied into the ocean. So location becomes a big deal even for a mobile home, because people want to have the ability to move around. They want to go to the beach. They want that lifestyle. So even if you can't afford to retire in a single family home or a townhouse in Florida, in Alabama, in South Carolina, Louisiana, even Texas, you're able to have a mobile home there where you can actually move it from place to place and see what that's like. Maintenance. So there's regular maintenance, repairs, insurance, and property taxes. When I go back here, you're still seeing the total cost of ownership go way down. So what are some things that you need to worry about from a maintenance perspective? So a lot of times you'll hook up water, you'll hook up the power, you'll hook up the waste management. So you're paying a percentage for that per month, plus you're renting the land. So again, when you have your mobile home, you buy it, you lease it, you rent it, whatever, you're still going to be paying for the property underneath to rent that, unless of course you own it, and which most people don't. And depending on where you're at, that can be from $100 to $500 to even $1,000 a month to rent the land, because the land is the most profitable part of that. So if I go over here, this article I found from Seeking Alpha, and again, I'm going to link this down in the description below. I thought this was wonderful. So this actually breaks down how do you invest. So we've talked about what is a mobile home, why is it important to look at this as an asset class, what are some things to look at when you go to invest in a mobile home, and then what does the future of mobile home look like. But now we need to talk about how to invest, and there's really two ways to go about this. You can invest in a REIT, which I've talked about before, and I'm going to put that video up here explaining REITs and how to invest that from a property perspective and add to your portfolio. So the first one is REITs, and the next one is mobile home builders. Now, in this article, the author here did just a tremendous job. This was actually created back in 2021, so it's about 2 years old. But it's talking about how manufactured housing REITs have outperformed the broad-based REIT index. And I'm actually going to pull up some of these REITs in the later part of the video, so make sure you stick around. And we're going to compare those. We're going to look at all the basic fundamental building blocks of an ETF. We're going to look at yield. We're going to look at expense ratio. We're going to look at EPS. We're going to look at all that. And then I'm going to give you my recommendations on how to start investing in the mobile home manufactured housing space. So stick around for that. So if I move down here, you'll actually see REIT overview. And some of these REITs, like I said, I'm going to get into, but there are specific manufactured housing REITs, Sun Equity, or Sun Communities, Equity Lifestyle, UMH Properties, and you'll see percentage. So really two REITs own most percentage of the sector, and the market cap into the billions. Okay, so if I move down here, I thought this was a very interesting graph. So manufactured housing REIT 101, so investment characteristics, you don't get a lot of dividend. You do get pretty high growth rate because, again, property values are going up for single family homes, which is pricing a lot of people out, unfortunately. Rents continue to skyrocket, and you really need to ask yourself, if you're going to pay $2,000 for a studio apartment in a busy city and a huge skyrise, would you rather have something like that you're going to have noisy neighbors, you're going to have people above and below you, you may not have the best service, parking's going to be a disaster, traffic's going to be a disaster? Or would you rather have a manufactured, prefabbed mobile home where you have a yard, you have more space, probably not as noisy, and kind of a better quality of life? So growth rate is high, economic sensitivity is low, so really the worse the economy does, the better mobile homes do. So it's an inverse ratio there. So whatever one goes up, the other one goes down. As the economy gets better, more people start to move back into apartments and homes, whereas the economy gets worse, they do the opposite. 20 million Americans live in manufactured housing, so that's about 7-8% of the population, which is incredible. And like I said, it's generally the cheapest available housing option. So when you've got single family homes and rentals, then you go below into prefab or manufactured housing. The real estate market in the United States is about 20 trillion. Manufactured housing is 400 billion, and it's continuing to rise. And then manufactured housing REITs, they've got about 20 billion market cap. There is a very limited supply, but as you'll see, I think there's going to be some really tight consolidation in the market over the next 20 years. You're going to see a lot of these mom and pops that own these prefab, these manufactured housing or markets. They're going to consolidate under Apollo Group, Blackstone, BlackRock, etc. All right, so if I move down here, you look at some of the breakdown from a REIT breakdown, Equity Lifestyle, Sun Communities, UMH Properties. So this aligns with what I saw in Google Trends earlier. You'll see here Florida, Texas, Northeast, Arizona, California. These are all hothouse environments. They have, they're close to beaches. They've got typically Sunbelt located, better weather. And you'll look here, a lot of it's manufactured housing in both of these REITs. If I move down here, one thing I liked was the total return. So if you look at yearly, manufactured housing in 2011 was 20%. It was 10% in 2013. If I move down here though, if you look, some of the best performing assets from a property sector and asset perspective were manufactured housing. It beat out healthcare, shopping centers, malls, hotels, even self-storage. I thought about doing a self-storage video. If you'd like to see that, comment down below and I'll definitely make one. Okay, recreational vehicle sales, there is some cross-pollination there between recreational vehicle sales and mobile homes. So you obviously need something to tow the mobile home as you move. Recreational vehicle sales have started to skyrocket into the millennial generation, as well as recreational vehicle housing and long-term storage. Next, we move into REIT dividend increases, and you'll see here one of the ones I'm going to look at, some communities in equity. Lifestyle, they have a current dividend 0.79 and 0.34. And they continue to increase their dividend. Now, as I move down here, here's the one I wanted to really point your attention to. Manufactured housing economics. So home sale prices, manufactured housing, $62,800 for the single wide, like I talked about earlier. Apartment, single family rental, home sale price, that's, anywhere, single family rental. Last I checked, the United States was about $1,900 a month, which would put the average sale price around $450,000. And then if you've got a single family owner, $122,000. One thing I wanted to look at here, rent per month, so $650 compared to $1,500. So you have a drastic difference in carry per month versus what you do from a single family rental for some of the other reasons I mentioned earlier. So your all-in monthly costs, like I said, the maintenance, the insurance, etc., much lower. Upside appreciation is limited, but if you're renting, you get none. And obviously there is more appreciation ability from the single family perspective. Average tenure, so if you're looking to invest in something like this, you've got most people that are in mobile homes or manufactured housing that stay in there. Their average tenure is 14 years, which is incredible. If you're looking for tenant or tenants, if you're looking to buy, you've got long-term holders where you're not doing a flip every 12 to 18 months. As I go down, we're going to actually now jump over into some of the REITs I'd look at today. So the three that I would recommend if you're looking to get into mobile home investing are Sun Communities, Equity Lifestyle Properties, UMH Properties, and then from the mobile home builders, we've got Legacy and we've got Skyline. So as I move over here, I actually use BART again to break down these 5 REITs and to see what they've got. So in this case, Sun Communities, the symbol, we've got Equity, UMH Properties, Legacy, and Skyline. They've got pretty good analyst ratings, 52-week highs, a little volatility. Great yield on all 3 of these, and then the Legacy and Skyline don't actually offer a dividend. So as I move over here and I look at the first one, Sun Communities, so they own, operate, and they have an interest portfolio of around 669 communities comprising 180,000 developed sites in 39 states, Canada, and the UK. ELS owns and operates an interest in 449 properties in 35 states, British Columbia, consisting of 171,000 sites. So we're talking about big holdings here. These are obviously REITs, so you're getting a lot of diversification. So just looking at Sun here, if I go all time, I'm actually in TradingView, and I'm going to link this down below with a combined list of all these REITs that I've mentioned in the video today. TradingView here, if I look at Sun Communities, we see all time back in from 93, it was $20 a share. It's not trading at 136. We see an all-time profit of 576%. With an all-time high of $209 a share back in 21. And it's no coincidence, right? As the economy has gotten worse, and it has, it dipped down here during the last economics session we had, but it's continually gotten higher. So we talked about that inverse going up as the economy, so prices go up, the economy goes down. As the economy goes down, prices continue to go up, and then vice versa. And then it obviously peaked. It went down when we hit COVID, right when that came in, and then as the economy again has gotten worse, it's just gone straight up. It has got back down as the economy's gotten a little bit better, but I expect as the recession that we're in, I expect the recession to get even worse than it is now, and I don't see any downside from owning something like this. So if I go down here, it's got a pretty good dividend, 2.77, pretty good P to E, a little high, good yield, got a good track record, founded in 75. If I go down here, you'll see some of the analyst ratings. The technicals say sell, but the analyst ratings say buy. I think it's a pretty good buy. You actually see some of the financials here. It's got its debt keeps increasing, but its free cash flow keeps increasing as well, and it continues to be profitable. So you're seeing gross profit versus EBIT, and then net income. It's continually like I said, had to take on more debt to buy up more properties. But as it does that, its continual cash flow keeps increasing. All right, the next one I'll look at from a mobile home builder is LEGH, which is Legacy Housing Corporation. So when I look at that, you're also going to see, you're not going to see a dividend here. They don't pay a dividend. Legacy Housing Corporation, excuse me, all time from back in 2019 or 2018, you're up 91%. So you've almost doubled your money in, what is that? For a little 4.5 years, you've doubled your money, 1193, and it's up to 2312. Really good P&E, so they're not taking on a ton of debt, and they're in consumer durables, founded in 2005. If I go down here, strong buy. Again, I can't agree more with that. The technicals show that, at least from down here, they're taking on less debt. They have higher free cash flow, shedding debt. They're increasing revenue, which is great. You always like to see that. And then the analysts give it a buy rating as well. And I've said this before in this video, and I'll say it again: the worse the economy does, better mobile home investing will continue to be. So there's several others. I'm going to link those in the description down below. But what are your thoughts? Are you interested in investing in mobile homes, adding this to your portfolio from a real estate perspective? What do you think the pros and cons are? Comment down below, and don't forget to design your financial freedom. Take care. Bye-bye.